So, I mean, what3words is pretty well known in the UK, but may not be so well known here. So I'll just explain the concept that we take the whole world and we divide it into these squares, as you say, of 3 meters by 3 meters. There are 57 trillion 3-meter squares in the world. And we name each one with a combination of 3 words. So something like table, chair, spoon, or coffee, banana, custard, literally.
This actual...
Yeah,
they actually exist.
These will be actual names of our 3-meter squares. So everybody here's house, we have named with 3 words for your front door, for your back door. They are unique, they are fixed, you can't change them. Every 3-meter square in the ocean, the North Pole, they've all been named. And we do this because we think it is easier than a latitude and longitude, which is 16 digits, which is quite complicated for the average human brain to remember. So just by saying index home raft, I'm now talking about a 3-meter square in the world somewhere, and I can use that for my delivery, to put in my car navigation, just like you would do a normal address. And if you live somewhere like I do on a farm in the UK, where your address points to the middle of a field, we don't get any of our deliveries at my house, no one ever finds my house, it can be very useful for you. In many places addresses work, that's okay, but in many places addresses don't work. And that's why we think that 3 words for 3 meters is a nice global solution. We did a bit of a mixture. So we did digital channels, 2018, 2019. We also had a huge boost from our emergency services in the UK. 85% of police, fire and ambulance services, you can call 999. If someone has a heart attack in a forest, you can say, I need help now at word, word, word. They have it in their control room systems and they will come and rescue you. And they also generate a lot of publicity for us and tell the public, have this app on your phone. And so that was an amazing publicity driver, and so was our digital channels. And right when we were going really big on digital, as anyone who runs digital ads will know, your costs will rise as you do, your creative starts to fatigue, and then we were thinking, okay, we need to do more than just digital. And it was a bit of good fortune. We got an email from Channel 4 saying, would you consider media for equity? I think when you're used to starting with digital, as companies these days are, you get these amazing metrics of all the platforms. You'll know exactly what hours your ads were served, to who, how long they watched it for, what they did afterwards. And then when you look at what TV offers you, which is kind of, it goes out for this month, and you just sort of look at the month stats, your immediate skepticism is, wow, this is really like vague reporting. How do you know if this works or not? And you have to spend a lot of money because you've got to spend, 100 grand plus to make your ad. You've then got to spend a decent amount to just try it. And if it doesn't work, that's a really expensive experiment. So I think that was our skepticism. We sort of knew and hoped it worked. Our CMO and people in our marketing team had been veterans of the advertising industry when TV was a really central part of any consumer campaign. So we had a good feeling it was going to work, but you're obviously just a bit itchy to go, okay, can we make the jump from digital and the amazing stats to TV, where it's going to be more of an experiment. But I guess doing it for media for equity, the way that it was offered, you get a discount, which is good because the TV channel wants to sell ad space. And so we thought, great, if it's discounted, we'll work really closely with them. They'll be invested in us. We can closely monitor this campaign, get some good stats. We'll give it a try, and it worked really well. Yeah, so actually a media for equity deal is slightly more complicated than pretty much every other deal you do. Not insurmountably, but you're effectively doing 2 deals. You're doing one, and it's kind of odd because you're sort of selling to each other. You're selling them the investment, they're trying to sell you ad space. And so you have these sort of funny phone calls where you're sort of co-selling to each other. But the general structure is to make 2 deals, but also link them. And just things about when shares are issued is a bit non-conventional, because normally you would do an investment deal, money comes in, shares are issued. That's not quite the same in media for equity. And if you've got existing investors who are not familiar with the model, they might look at it and go, that's a bit odd. How is this structured? And then they need a time to get comfortable with how it's structured. And so also having done probably 5 of these deals now, they have 5 totally different contract models for how these are done.
It's different in every country, right?
It's different in every country, and even in countries it's different in every case. Also something to bear in mind with media for equity, sometimes you get 100% in that no cash changes hands. And sometimes it's a bit and both. You might have 80-20, so you have to pay 20% of it in cash, and you pay 80% of it in your shares, something like that. It is, and India, 1 billion people. So to get consumer network effect, where everyone's heard of you, is pretty tough if you're trying to do a market of 1 billion people. So what we're trying to achieve is some good level of consumer adoption, but also interest and awareness amongst our business targets. And so with the Times of India Group, which is Brand Capital International, who we did that deal with, a lot of their media assets are business focused. So the Times of India newspaper is read by the business community. So we will do a lot of ads in there, as well as stuff which general consumers will see. And then, for example, airport billboards, we're a bit unsure of, we've never done them before, but they're great. People are sitting bored, normally waiting for their flight, and they'll just be staring at your ad. And our system actually works very well for it, because it's quite conceptual. It's like 3 meters, 3 words, people are just staring at it, like, what is this? Then they'll take the time to download the app, play around. So it's been a remarkably effective tool for us. And of course, the people who are flying regularly, more likely to be business people. So again, once that call comes in from us to a delivery company in India going, do you want to make more precise deliveries with what3words? They're like, yeah, I've been reading all about this, I do. And they have a chat with us. And then they say, how many consumers have you got? And you say, well, a lot, because we've been running consumer ads around the country. So that campaign and the sheer volume of assets that Brand Capital International or Times of India have is really good for a company like us who are trying to do half consumer, half business in a single campaign. Yeah, so I guess one thing I've learned, I mean, it's very helpful to us, like of our 170 people at what3words, a lot of them work in our marketing team, maybe 40 or 50 or something, which is a pretty big marketing team. We're making a lot of assets in-house. And so what we'll often do before we put it on TV is we will run a few variations of it on digital channels, of which you get same-day feedback. And you go, is variant A better than variant B? So by the time you actually send your asset to the TV channel and go, this is yours for 1 month, it's locked in, you've got some feedback based on how it performs on digital channels. But it doesn't follow that an ad which works well on digital will work well on TV or vice versa. But you're still just getting some kind of feedback if you've got a good engine that you can go in straight away. And if you do good translation and localization, you can even go, right, how does it work in UK? How does it work in Germany? Or other markets, and just pick up some data which makes you adjust your ad a bit, calls to actions, anything like that, before you take the plunge about going forward. But I would say for any companies thinking about doing media for equity, media for growth, I would say be really pretty experienced at running digital and about that engine, making creative, knowing what works for your company. Otherwise, if you get it wrong, it's going to be expensive. If you put a lot of money into one TV campaign and you haven't got it right. They treat you very well in terms of helping you get the best campaign. And as someone coming into this who didn't know much about TV advertising before, and you can be just given your TV slots, and if you're not sure what you're hoping for, that's going to be difficult. But what they'll really try and do is get you spots with diverse reach. So basically what you don't want to do is just be on the same ad break at 11:30 p.m. every day in the same show. You're going to hit 20,000 people many times who are going to get very bored of your ad. So that's one end of the extreme. What you want to do is couple that with getting your big Saturday night, everyone's on the sofa show where you reach a huge part of your population once, and you want to really push for those slots and get them. And so I think just having a better strategic relationship with the media owner, you talk through that, you say, hey, what's coming up? You know, in our case, it was things like you've got the football Euros, the World Cup coming up, and you go, wow, a lot of people are going to be watching that. Can we get this spot? And they will fight for you internally to make sure that their portfolio company gets that spot. If you're just a cash paying customer, it is harder to get the same, and you might just be having to take that 3 a.m. slot that you didn't really want. The media owners who do these deals, they want to normally do kind of a specific range of money. And often as the startup, you probably want to go smaller as well. You want to do a smaller test, check it works, and then do more. And they maybe want you to commit more at the start. So you have to try and find a middle ground in there. And I think, yeah, just that notion of also the split. So with some of the media owners, then there's some TV, some radio, some out of home, and their deals are structured in a way where you're probably encouraged to do that split in a way that suits them. And you have to then push back if you think that your product is going to go in a different way. I mean, also one example with us, what3words as a concept, it might have taken me about a minute to explain it at the beginning of this, a minute and a half. And when in some markets people go, well, adverts are normally 15 seconds in this market. And we say, we cannot explain what3words in 15 seconds. It's not possible. We've tried it many years. You need 45 seconds or a minute or longer. And they'll say, well, it's very irregular to run a 45-second advert. And so sometimes we get hung up on the first call, and I'm sitting there going, I want a 45-second ad. And it's kind of become this famous thing where Chris wants to run a 3-minute ad. And the media owners are like, this isn't unheard of. And so we do often agree a middle ground. But I think just knowing your own company, knowing what works, and not being afraid to be a little bit pushy, like in our case, ad length was one of the key things we pushed for. And funnily enough, in the ad that we started with, there is a 30-second version. This was the 40-second version, and all you get in the extra 10 seconds is more British awkwardness. The 30-second, we just cut 10 seconds of like awkward squirming. But for me, the extra 10 seconds of awkwardness is kind of what makes the ad, and maybe why it won the awards. So I think fighting for your particular what works for you is important, and often you'll get there.